With all the apps and digital ways to send money these days, you gotta wonder, what even is a bank anymore? And do you really need one? Let's get into it. So, picture this. You just got that first paycheck, or maybe a bunch of birthday cash. It feels great, right? But now what do you do with it? Where you put that money is actually a way bigger deal than you might think. I mean, sure, you could just stash it under your mattress, but let's look at the difference here. At home, that cash could get lost, damaged, or even stolen. In a bank, it's secure and protected. Under the mattress, a $20 bill will always be just a $20 bill. But in a bank, it can actually grow and earn you more money through something called interest. And let's be real, trying to buy something online with the cash from your sock drawer? Not gonna happen. A bank makes your money available pretty much anywhere, anytime. So yeah, why bother with a bank? Well, think of it like this. You're building a fortress to protect your money. When you boil it all down, a bank does three really important things. 1, it holds and protects your cash. 2, it gives you easy ways to pay for stuff. And 3, it actually lends money out to other people and businesses. That's a huge deal because it helps the whole economy run. And it's also how they can afford to pay you for keeping your money there. And, banks aren't just those big brick buildings anymore. Think about those apps you probably already use, like Venmo or Cash App. Where do you think that money actually comes from or goes to? Yep, for almost everyone, those apps are hooked up to a good old-fashioned bank account. They're like the central hub for pretty much all money. Okay, so when you do put your money in a bank, it usually goes into one of two homes. You've got your checking account and you've got your savings account. And knowing the difference is key. Your checking account is for your daily life. It's for everyday spending, like grabbing a pizza with friends or buying something online. Your savings account, that's for your future. It's for those big goals, like saving up for a car or for college. Honestly, keeping them separate isn't just about being organized. It's kind of like a mental trick to stop you from accidentally spending your car money on pizza. But okay, let's be real for a second. You're trusting this place with all your hard-earned money. What if the bank messes up? Or worse, what if it goes out of business? Is your money actually safe? The answer is a big, loud yes. And it's all thanks to something called FDIC insurance. The best way to think of it is like a personal bodyguard for your cash. And this bodyguard is backed by the entire US government. It's a rock-solid guarantee that your money is safe no matter what. And this isn't some small promise. The FDIC insures your money all the way up to $250,000 per person per bank. That means if your bank were to fail, the government literally steps in and makes sure you get your money back. That peace of mind, that's something your mattress just can't offer. So remember how I said your money can grow in a bank? That's because of interest. You mostly get this in a savings account. See, the bank uses the money it's holding, your money, to give out loans to other people. And as a little thank you for letting them use it, they share a tiny piece of their profit with you. It really is like your money is working to make you more money even while you're sleeping. Okay, let's talk about the fun part, spending. The main tool you're going to use is your debit card. It feels like magic when you just tap it and walk away with your stuff, but how does that little piece of plastic actually work? It all happens in the blink of an eye, and it's basically 3 simple steps. First, you swipe, dip, or tap your card. That's you saying, yep, I approve this payment. Then, behind the scenes, a message zips to your bank asking, hey, do they have enough cash for this? And if the answer is yes, then bam, step 3. The money is instantly taken out of your checking account and sent to the store. It's that fast. But it's not all magic and money-making. There are some hidden traps you gotta watch out for. And the biggest ones, by far, are fees. Ugh, has this ever happened to you or someone you know? You get that dreaded text message. Your account is overdrawn. That means you spent money you didn't have. And not only is that super stressful, but the bank just slapped you with a pretty big fee for it. But here's the good news. You can totally dodge these fees if you know how. For overdrafts, just go into your banking app right now and turn on low balance alerts. So easy. For those annoying monthly fees, you should actively look for free student accounts. Most banks have them. And to avoid ATM fees, just use your own bank's app. It'll have a map showing you exactly where their free-to-use ATMs are. And let's talk about that new wave of online-only banks and financial apps. They're super popular, especially with teens, because their apps look cool and are really easy to use. And that convenience is awesome, but you have to be a smart consumer. Some of these are great, but others might have sneaky fees hidden in the fine print. And more importantly, Some might not be real banks, which means they might not have that FDIC insurance we talked about. So just do a little homework first. Convenience is great, but it should never, ever replace caution. So, are you ready to take that first step toward real financial power? Let's quickly go over how to actually open your first account. Here's your quick checklist. First, shop around. Don't just go to the first bank you see. Compare a few and specifically ask about their student accounts. Your main mission is to find one with zero or very low monthly fees. Also, make sure their mobile app is good because you're going to be using it a lot. Now, since you're probably under 18, you will need a parent or guardian to co-sign with you. And when you go, make sure you bring your social security number and some form of ID. Taking this step now starts building your financial history, which will be a massive help to you later in life. Look, at the end of the day, the whole point of getting a bank account now is to learn. Think of it as putting training wheels on your financial bike. It is so much better to make a few little mistakes now when the stakes are low than to learn the hard way when you're older and a mistake could cost you a lot more. A bank account isn't just some boring place to hide your money. It's the first step to learning how to use money as a tool. And a bank is the workshop that gives you what you need to use that tool well. So the only real question is, are you ready to start building?